You may not realise that UK inflation has remained stickier than many anticipated over the last few months, preventing the Bank of England from adopting a more dovish stance. As we approach the UK CPI release this week, historical patterns suggest that the pound has tended to hold firm post-inflation prints, pushing the euro pound lower. So that'll be interesting as we approach the CPI print on Wednesday, March the 26th. And given the latest CPI trend, we just want to analyse the data in a bit more detail. UK inflation has been persistent, with the latest January print showing a CPI at 3% year on year and 3.7% year on year for the core. So it's just been a bit higher. Although they've both declined from their peaks, the pace of disinflation has slowed, keeping market expectations for Bank of England rate cuts at bay. Now, if you look at the chart for the last sort of year, you can see that typically out of the CPI event, in the 10 days after the event, you can see, look, the euro pound tends to fall. The pound has displayed general strength out of the CPI prints, which does reflect the disappointment that the inflation battle is not being won more quickly in the UK and that stronger pound positioning. So, stronger high inflation forces the Bank of England to maintain a restrictive stance for longer, which is what leads to sustained pound strength. So the implications for this, if UK CPI remains elevated on Wednesday, March the 26th, then it's not unreasonable to expect pound strength to remain, and that could end up in that euro pound sell bias out of the event. Now, obviously, the major risk to this outlook is if we get a dovish surprise. If the inflation print comes in below market's minimum expectations, then we could see the opposite happening. We can actually see the euro pound gain quite sharply. Remember, that hasn't happened for quite a while. We haven't had many downward surprises to the UK inflation print. So if we do get one, we might see an outsized market reaction. So do keep that in mind. From a technical perspective, big levels at the 460 and the 500 and the 600, just big levels that will be used for take profit, managing stops, etc., etc. Something to be aware of. Trade risks, the major trade risk, of course, with this is that if we have a weaker than expected CPI reading, we could see markets quickly shift towards pricing in more Bank of England rate cuts, potentially breaking this seasonal event risk pattern. Also, don't forget there are significant external factors such as ECB policy shifts or broader risk sentiment that can influence the euro pound beyond the UK inflation data alone. Don't just trade it. Seasonax, sign up here at Seasonax to get literally thousands more seasonal insights that are just waiting to be revealed.